Tax season, the last two words you want to hear, are rapidly approaching. And this year, there are a whole bunch from what I saw here of changes. And maybe some of them good, maybe some of them you didn't know about. So we thought we'd try to run some of these down right now. I see 8 here. So we're going to be joined by HARVEY BIENENSTOCK, who's a certified public accountant. HARVEY, you've been doing this. Did we just lose HARVEY? Okay, we lost HARVEY. We'll get him back. I think he's been doing this for something like 50 or 55 years.
So I
figured he'd be a good guy to ask.
I think he's a very good guy to ask because he called in and gave us some great advice, and particularly you some great advice, which has now led to you being engaged.
Yeah.
I feel like we need to give the backstory. What? I'm sorry. What was that, Aaron?
Well, I didn't know we were going to do the backstory, so
we have to do the backstory.
Okay. You saw that's how we met HARVEY. He called the show one day. We were talking about retirement, and HARVEY called up to let me know as well, that if I'm not living with someone, if you're not living common law or married to someone or file a joint tax return when you die, the government's only cut you a check for $2,500. They keep the rest, right? Yeah, HARVEY, is that basically it?
Yeah, that's it.
Okay.
And I'd also recommend that if you are going to have a spouse, then you should set up an RRSP in her name as a spousal and not your own, and stop contributing to yours, because as you get older, it's counterproductive.
This is why we have HARVEY on the show, for this sort of advice.
Yeah, he's good. You're
HARVEY,
good, HARVEY.
thank you for being here today. We appreciate it.
Okay.
Look, so I mentioned there are a whole bunch of things here. I have a list of 8 different things as far as taxes go this year. Maybe some of these are good. You can get some money back. So can we run down some of them?
Sure enough.
I thought we'd
but
start
you have
with
to be careful, because these are what's called boutique tax credits. I mean, they're targeted against specific groups, so that they will get political capital from it. But even though they tell you you're getting a credit, a lot of it gets ground down by your family income. So when you start doing the calculations, you find that you're not getting what you think you're getting.
Okay. Can I run these down? You tell me what you think. So number one is the first-time home tax credit.
That's great, because it used to be a $5,000 credit, but it's a credit for $5,000, but when you put on your tax return, the feds give you like 12.5%, because it's a credit, not a deduction. So you're really getting $600, and you can split it with your buyer. Now, for this year, they doubled it to $10,000 for last year, so that it is an excellent credit, because if you're buying a house, everything can help.
Okay, number two.
They doubled it?
Yeah, from top 5,000 to 10,000.
That's amazing.
And you can split it with a spouse who are going to put on title with you on the house, so it could be one or both.
Number two, the tax credit for home support services for seniors.
Yeah, well, that's good if you're over 70. And that stops people from going into government CSLSDs, because if you go to a public old age home, it costs them like $60,000 a year to meet. So they want you to go somewhere else. So if you go to a private old age home and you pay for meals and nursing and rent, etc., and the nursing home will give you a receipt, and it will detail what the expenses are and the maintenance costs there. And the nursing cost would be accreditable. Again, gets ground down by your income, but it is there. Also, that credit exists if you are maintaining your own home. They want you to stay in your own home, and they will give you a credit for the maintenance costs that you incur by owning your own home. And it's only maintenance, like landscaping, snow removal, and repairs. It doesn't include, real estate taxes or electricity or insurance or anything. So that credit isn't very large, but it looks good. If anybody is in a private old age home, it comes in handy. Okay, and if you are staying in your own home, and the government, you're right, is encouraging you to do that, the costs associated with staying there, for example, caregivers, et cetera, can you claim that as well? No, caregivers is a medical expense, but you can claim what's called Meals on Wheels, and maybe some nursing attendant at home, and also the maintenance costs. But it's limited. And again, it gets ground down by your family income. Okay.
Number 3, home accessibility tax credit.
Yeah, well, there you have to incur costs to renovate your home so that you can function as a senior. And there may be like bathtub rails or chair lifts or things that will make it accessible for you. But you got to incur the expenses, and it's going to cost you money. And I don't know how long you're going to stay there. So it's worth it. Yes.
All right. You got the next one?
Yeah, we're on to the tax credit for multi-generational housing.
Again, you've got to have a second residence and improve that to put seniors in there, or at least 65 years old. So therefore, you got to spend a lot of money to put on a second residence. I don't know who's going to buy a second residence for family members, but you can't house them in your own place, in the basement, say, or another room. You got to improve a second residence, and you can expend up to $50,000, and you'll get 15% as a credit, so you get $7,500.
So, HARVEY, only on purchased properties?
No, this is a renovation.
Okay, so it's not a rental. Like if you have someone living in a rental and you do a renovation, does that count?
No, it has to be one of your generations.
Okay.
It's got to be to house the gay seniors to keep them out of old age homes.
Now, the next one that actually may be of interest to a lot of people with this whole issue of telework. I remember when the government talked about this. How does this work, the telework tax credit?
Yeah, it started in the COVID thing where the employers made you stay home, and they have to issue a letter that says that you were forced to work from home. And there the credit is like $2 per day to a maximum of $500. So that's not a credit, that's a deduction on your tax return of $500. So whatever your tax rate is, if it's 40%, you save $200. Now, if you're self-employed, you can ignore this and say that I incurred more expenses to work from home. I had to fix up my office. I had to buy, furniture and computers and stuff, and avoid this one and go to an employment expense deduction instead of a COVID tax credit.
Oh, interesting. Okay, but if you are going to use it for a job as an employee, you have to have something from your employer telling you that you were forced to, or you need to stay home.
Or else everybody would do it and it wouldn't be right.
Right. Okay.
Okay, refundable tax credit for medical expenses, Harvey.
Yeah, well, there's two things. Medical expenses are deductible to the extent that they exceed 3% of your net income. Federally, you choose the lower income spouse and you have them claim your medical expenses. Quebec treats everything differently. They combine your family income together, and they take 3% of your combined incomes of you and your spouse, and that's the excess is deductible. Okay, and also in the feds, it's a limit of the first 2,100 is you pay yourself. Quebec, there's no limit on the threshold. So if you and your spouse are making together, say 150,000, 3% deductible is 4,500, not 2,100. Now, there's a second credit, which is if you have a low income and a high medical expense year, they will give you what's called a refundable credit for some medical expenses, but it's up to the extent of, I think, $1,200 for the $13 for the feds and $1,200 for Quebec. So it might be worth like $2,600, but again, it gets eroded by your family income. So if you have a return where you combine your incomes, you may end up losing a lot of money. And I would say that 38% of Quebecers do their own tax returns. The other 62% who are listening to us don't need this advice because they have professionals. But if you're doing your own, I would strongly suggest you go buy a tax software package. They're very easy to use. They cost like $25, and they prompt you for all of these credits when you're filling in the information. Have you considered this? Have you considered this? Oh. Plus, you don't have to print out any paper. You file electronically. You get your credit after 10 days instead of 6 weeks, and you've got a permanent record on your computer, and you can carry forward next year all your information. So if you haven't claimed anything, or you have unused tuition fees or unused donations, it'll be in your computer so that your software will pick it up. It's a great thing to do.
It sounds like tax software has come a long way.
It has. It's fabulous. It's very easy to use. And it's simple to input your data, and it asks you, like, do you live alone? Have you claimed this credit? Do you have a disability credit? Things like that. Okay. And it's fabulous. It costs like $25, and it's worth its weight in gold.
Now, I know we've got two more to get to, but I'm just, first of all, can you repeat the percent? Did you say 62% of people in Quebec pay someone to do their taxes?
That's right. It was on Elias Malco show this morning where he had a professional go on, and he said, 38% of people do their own.
Huh. Okay. And then the next thing I need to know is, just as you're rattling off all this information, you know this all by heart?
There are changes every year that you got to keep up with, and as accountants, we're forced to do professional development and take courses to stay on top of things. But there are, if you have a question, you can just Google it. You type in like medical expenses, and the CRA will list all the expenses.
Still, it's kind of astonishing.
In fact, this year they allowed diabetes as a medical expense if you have certain treatment. So if you keep up with it, you'll be okay. And again, it only applies to certain of your clients, so you look it up when you have to know.
Okay, well, let's cover the last two before we run out of time. So this one, this is good for parents. Children's activities tax credit.
Okay, it sounds great, but it's limited to $100 per kid, only on Quebec, and in other provinces, but not federally. So you have to if you spend $500 on, say, your kid's hockey team or your daughter's ballet lessons, you can claim up to $500, and that's a 20% credit, so you get $100 back per kid. Okay. Not a great amount of money, but again, it may buy a couple of votes.
Okay, and I imagine it depends on how much you earn again.
No, that's a flat credit. Now, in Quebec, yes, if you earn family income more than $146,000 combined, you get nothing.
Okay.
So again, sounds good, but if you are in a high income bracket, you don't really get much.
All right,
Okay,
last one on
and
the
then
list.
is the tax credit for the treatment of infertility. Tell us
Okay,
about
now federally, this is a medical expense, so that when you do incur the treatments and licensed doctor, you can deduct it as a medical expense, subject to that 3% limitation. Quebec gives you a special credit because they want you to have kids, and it says you get 80% of $20,000. But again, you have to look at your family income, and if you make more than say $120,000 combined, or singly around 26,000. Then it goes from 80% to 20%. So where they tell you you're getting 80% to 20,000, you may end up only getting 20% to 20,000.
Oh,
Okay.
my God. Harvey, you'll be happy to know that as you've been going through this stuff, we've been getting texts, someone saying, is Harvey an active account? He's awesome. Thanks for having him on. And other people would simply like to know where to get a hold of you as an
Well,
accountant.
unfortunately,
Yeah.
my wife is not too happy because I'm in my 70s, as we realize. And if people call me, first thing I ask them is, what have you been doing up till now? What has happened to your current accountant? Well, he's either retired or dead. So I said, well, I got bad news for you because this isn't going to be that long a relationship if you come to me either.
Okay.
Harvey.
But thank
And
you
I
for the nice
because
words.
looks like Andy Warhol was prophetic. I got my 15 minutes of fame.
There you go. Harvey, thank you so
well
much.
earned.
A lot of people enjoying and taking in what you said. Appreciate it. Take good care.
Thank you very much.
You bet.
Good luck.
Harvey Bienenstock,
Thanks, Harvey.
accountant with some of these changes. They add up a little bit here and a little bit there, but at the end, if you can get credits, and why not?
Yeah, and I like
Right?
what he said about the software prompts you. That's awesome because it sounds to me like filing taxes is just more complicated than ever before, but you can reap the benefits if you take the time.
Eye roll inducing after a while. So if tax software can do it for you, and as he said, it's come a long way. I did not know they were that good or software was that good. Why not?